Thank you very much for joining me on this lecture series in your advanced financial reporting class. I hope that everything is okay with you. My name is Ngandaro Joseph, and our focus in this lecture is assets held for sale and discontinued operations. Assets held for sale and discontinued operations. I thought about a firm that is in the process of restructuring. That firm may find that it has got excess assets, and there is need for us to know how to deal with discontinued operations as well as assets held for sale. Okay, so IFRS 5 guides the accounting treatment of assets which are meant to be sold and operations which are supposed to be discontinued. So assets, of course, deals with the position statement, while discontinued operations deals with the performance statement. And in this class, of course, I want us to have a theory discussion with us. Of course, for my students, I'm going to send you this particular work as well as question practice. Okay, so IFRS 5 covers the following: measurement, presentation, and disclosure of non-current assets and disposal groups of an entity, as well as the presentation and disclosure of discontinued operations. Okay, what is the principle of IFRS 5? I think the students should be aware by now that you need to have an understanding of the spirit of each one of your standards that is in the syllabus for advanced financial reporting. And frankly, this is carry forward knowledge from the previous studies that you had in your FR class. The general requirement of IFRS 5 is that an entity shall present and disclose information that enables users of financial statements to evaluate the financial effects of discontinued operations and disposals of non-current assets and disposals groups. Now, of course, these must be disclosed or recognized rather separately. A disposal group, under the key term there, is a group of assets to be disposed of. Okay, I needed to include another F here. Is a group of assets to be disposed of by sale or otherwise together as a group in a single transaction, and liabilities directly associated with those assets that will be transferred in that transaction. Assets held for sale, these are simply assets earmarked to be sold. An entity shall classify a non-current asset as held for sale if its carrying amount will be recovered principally through a sale transaction rather than through continued usage. All right. Now, what are some of the conditions that must be fulfilled for an asset to be held for sale? Number one, the asset must be available for immediate sale in its present condition, subject to usual and customary sales terms. And of course, the sale must be highly probable. Now, when we say highly probable, we mean the following: condition for an asset to be held for sale. Highly probable sale, we can use the acronym PUMAS. The price that the asset is being sold at should be reasonable. At least it should be somewhere near fair value. It should be closer to the fair value. It should be unlikely that there will be significant changes made to the plan to sell the asset, meaning that managers must commit to this plan to sell the asset. The management commitment to plan, management rather must express commitment to sell the asset. I think that is somehow connected with the second point. There must be an active program to locate the buyer. We shouldn't have found the buyer, but at least we should be in search of one. Then there must be this last condition: the sale should be expected to be completed within 1 year of classification. So for us to say this asset is held for sale, all these conditions must be satisfied. Assets held for sale must be measured carefully, and of course the measurement is inspired by the prudence concept. So we need to establish the carrying value of the asset in accordance with relevant IFRS. In this case, it's likely to be I-16. On classification, we need to recognize the asset at the lower of the carrying value or fair value less costs, less any charge of impairment loss. Okay, you need to charge any and when you find that the fair value of the asset is lower than the carrying value, you need to charge an impairment loss to the profit or loss. Right. Non-current assets disposal groups. These are classified as held for sale also, and they should not be depreciated. Let me read that one again. It says non-current assets or disposal groups classified as held for sale are not to be depreciated or amortized. So these are to be taken as current assets. Any subsequent changes in fair value less cost to sale are recognized as a further impairment loss or indeed a reversal in impairment loss. Okay, now separate presentation is very crucial here. Presentation of assets held for sale. If an asset is held for sale, we should present it as a single amount, a separate amount. Okay? We should remember this on the face of the statement of financial position. It should be separated from non-current assets, because now the asset is to be recovered via a sale. So all these non-current assets held for sale, all your non-current assets held for sale should be treated as current assets, and offsetting is prohibited. Right. Non-current assets. Now, non-current assets to be abandoned there. Non-current assets to be abandoned are not classified as held for sale, particularly if we don't fulfill the PUMA's requirement, since these assets carrying amount will be recovered principally through continued use. Such assets include those used to the end of their economic life or closed rather than sold. Okay, so that is discussed. Now we go to discontinued operations. This is a component of an entity that is either or that has either been disposed of or is classified as held for sale. It should represent a separate major line of business or geographical area of operation. It should form part of a single coordinated plan to dispose of separate major line of business or geographical area of operations. Okay, let me just try to correct something here. Okay, and then finally we have got a discontinued operation is defined as a subsidiary acquired exclusively with a view to resale. Okay, so now subsidiaries held for sale. Where an entity is committed to a sale plan involving a loss of control but a retention of non-controlling interest, we have got some points in the brackets. You can see chapter 12, changes in group structures, and so on and so forth. The assets and liabilities. Let me read that one again. Where an entity is committed to a sale plan involving loss of control but a retention of non-controlling interest, the assets and liabilities of the subsidiary are still classified as held for sale and disclosed as a discontinued operation when the respective criteria is met. Okay. Thank you very much for listening to me. This particular standard, I am going to send question on discontinued operation so that we can see if we can be able to, respond. Thank you very much and have a good time.